21st Century Entrepreneurship with Martin Piskarik.
Are you tired of the same old financial advice that never seems to move the needle? What if you could bypass the fluff and learn directly from somebody like myself who's acquired over $2.1 billion of real estate without flipping houses or relying on Wall Street, stocks, bonds, mutual funds, that type of stuff? My name is Kawaoka. I'm a former engineer turned full-time real estate investor and also host of the Top 50 podcast, The Wealth Elevator, and the Wealth Elevator book, found on Amazon, also a bestseller. I'm going to show you how to generate passive income, reduce your tax bills, and also build a legacy while working your 9-to-5 or your entrepreneur venture. Before I go any further, a lot of people I work with, they already have some decent amount of money, right? Like in my book, The Wealth Elevator, I break down 3 or 4 different floors of this kind of mind map. People in the basement normally aren't my clients, right? These are the people who might read books such as from Susie Orman, Dave Ramsey. And if you can't keep a budget or you're in credit card debt, please don't listen to me, right? I'm not the guy to follow. My story started when I was an engineer back in 2009. I had a good paying job, right? I wasn't making multiple 6 figures, but I had a decent job that I could save at least $5,000 to $20,000 per year. I used that to buy my first rental property, and then I was off and rolling. And I bought more and more. In 2015, I had 11 rental properties. At that point, I became an accredited investor, net worth $1 million or greater. And at that point, I started to realize what the wealthy started to invest in: apartment syndications and other businesses. The first floor of the Wealth Elevator is all about buying little rental properties. This is what I did when I was an engineer from 2009 to 2015. All the money that I got went to going to paying down payments. Where I'm at, you normally need about 20% down payment to buy the house. Now, I'm not a huge fan of any of these strategies that people use, such as no money down. To me, you need money to get into the game. Real estate is a great way to save money in taxes and build wealth. But the problem is it is capital intensive. And if you don't got money, well, you need to go make some money and maybe go find a job or work your entrepreneur business. But real estate is a great way if you've got $20,000 to $50,000 to buy your first rental property with a nice down payment there. Once you've acquired a bunch of them, like I did in 2015, I realized that the wealthy kind of stepped up to a different strategy. And in my book, The Wealth Elevator, I talk about the transition between the first floor and the second floor of the Wealth Elevator, where investors start to trade in their little rental properties and try to go into larger apartment deals and syndications as a passive investor for a few reasons. First, better deals, more scalability, less roofs to repair under one building in comparison to a number of units. Secondly, the legal liability. When you're a passive investor, you're not the one on the hook for these little frivolous lawsuits, slip, trips, and falls. It's a huge, huge liability for people once they get over $1 million net worth, because they finally have something to lose at that point, to get into rental property ownership. And that's why a lot of these investors try to get rid of them and get into more of a passive investor position, an LP, limited partner. And thirdly, you've got these better deals where you can do value add and then also do cost segregations on it and extract a lot more tax benefits. We see people maybe implementing real estate professional status and then being able to deduct way more on their taxes, essentially slashing their tax bill. And that's another way you make more money, right? It's kind of like, unfortunately, the rich, or in this case, the more knowledgeable, the more educated, get ahead. So what I wanted to do with my book, The Wealth Elevator, is finally write a book made for accredited investors, right? People who make over $250,000 a year. Typically, those are business owners, right? That control their own destiny, or people with already $1 million net worth or greater, right? As I've mentioned earlier, the investment strategies change, right? You don't invest in little rental properties. They're just not scalable. When I had 11 rental properties, I had an eviction or two every year, some kind of big catastrophe that happened every quarter. Now I had a professional property management to do all this stuff because I was working my full-time engineering job at the time, but it just became a headache. And with 11 houses at a couple $100 of cash flow per, that was a measly $3,000 of cash flow every month. Really not enough, right? Most of my clients, and I'm thinking, if you're a successful business owner out there, you're needing something more like $10,000 to $20,000 per month. So if you're taking this down with little single family homes, you're going to need damn near 30 or 40 of them or more. And it's just going to be another job and then increase liability as you get additional rental property after rental property. Now, when you step into the world of being a passive investors in syndications and private placements, you also give away the management headache, right? A lot of times with the construct that we like to use to explain this to new folks like this is the symbolic idea of an airplane, right? In an airplane, you have a cockpit of the general partners, the operators, who will go out, find the deal, operate the deal, send out distributions. The legal liability will be in their name, and also the debt will be in their name, as oftentimes the loan guarantors will be sitting up in the cockpit too. You, the passive investor, will be sitting in coach, right? You're not flying the airplane, right? You're not on the direct line to get sued there. And it allows you to now board many planes at once, right? Like I'm personally been in 100+ deals at any one time. I'm gonna get a simple K1 form instead of a Schedule C or E, a very cumbersome return that way. And what I realized when I started to make my way from rental property ownership into this world is a lot of these passive investors will be investing in dozens and dozens of these types of deals, getting great diversification, not only in one asset, but different geographic locations. And now we're starting to invest in businesses in this high interest rate environment. So now you're able to diversify into different asset classes, even within real estate too, right? Mobile home parks, self-storage, oil and gas. The amount of deals you can get into is limitless. You can go into buying and acquiring other businesses. So, if you've ever been out there looking to acquire a competitor, right, take them out, get a little more stranglehold on your competition. Maybe you've built great systems, right? This model is a way to expand what you've already built. So check out my book, The Wealth Elevator. If depending on where you're at, I would have flipped through we have a table in there because I'm an engineer. I'm a table and chart guy. First thing I would say do is figure out what floor of the wealth elevator you are on, right? If you are under $1 million net worth, great place to start, right? But most of the content is written for $1 million net worth or higher investor. Oftentimes business owners out there fit this category. And nothing that I don't put in the book isn't something I've experienced myself, right? I try to speak from experience. And nowadays, I've had the luxury of rubbing shoulders with people on the family office level, right? The 50, the 100, 200+ net worth $1 million million and greater. And it's allowed me to see contrast between people who are first generation multimillionaires, people under the $5-10 million range, and people that are 10, 20x that, right? See that threshold and the steps to get there. And I talk about this in the book. So I think the content that I bring is pretty rare. It's kind of a behind the scenes or things that not a lot of people talk about, right? And that was, on the side, what we also do is we put on events for accredited investors. And, the feedback that we get is very positive. And, it's very before I found this type of community, I felt alone. right? If you're a business owner, you typically, unless you're in different groups out there like YPO, EO, Vistage, which I'm a part of, it's a lonely world out there, right? Finding other business owners and entrepreneurs, you can't really talk about this with your neighbor who just works a day job. So, I think that's what we've kind of created ourselves, right? A lot of our investors are business owners. I mean, heck, that's the only way you're going to build multi-million-dollar net worth and greater. What we try to help people do is expedite to what I call end game, $4 to $5 million net worth, because at that point you can probably take your net worth and throw it into something very conservative like T-bills or life insurance and just cash flow off of that till your remaining days. But until you're there, you've got to keep working and you've got to keep aggressively investing. And I think that's kind of where we come in with the education side. With the mastermind, you're around other accredited investors, right? People with a net worth of $1 million or greater, or make at least $250,000. So some of the avatars in here are the business owners, obviously, because the incomes there are pretty much unlimited, right? I think the other side is the high-paid professionals, so doctors, dentists, a lot of dentists for some reason, right? Because I think dentists are kind of the last entrepreneur minds in the medical world in the high-income arena. Most of the folks in our community are above the age of 45. I would say typically in the 50s, right? I think the reason being is, you have to have a substantial net worth, right? And I think that also comes with maturity too. A lot of people who've reached that level, I would say the second floor of the wealth elevator, have already hit a point in life where they realize that time is more important than money. And a byproduct of that too is social relationships are the currency of the wealthy at the end of the day. And this is kind of we look for people with the same value sets and, these types of views. And we put it into our community. And the goal is that we're all trying to grow to 8 figures together. Using kind of the idea of investing in real estate, investing in private equity, using the tax benefits to pay less taxes, to cut that down on that drag of, increasing your net worth. If you think of it like a rocket ship, less drag, you get further along through the atmosphere. But doing it in this realm of, you've got to pass down the wealth at some point. Now, like I said earlier, like getting to $4 to $5 million net worth is key to, just from a mathematical standpoint, living off the 4 to 5% to your remaining days. But most people's got a couple kids, right? To me, that's an interesting point where, divided by 2, each kid gets 2 million. To me, if you give your kid more than 2 million, 3 million, you've already hit that law of diminishing returns at that point. And it's more important for them, once you've hit a net worth of 4 million, giving each kid 2 million, that it's more important that you give them the knowledge set and the network and the community, which also comes with the deal flow. Where do they invest in the future, right? Where do they find these country club syndicated type of deals, right? It's not found on the internet. It's not on some crowdfunding website. That's just the reused stuff that people sell through a broker dealer. But where they get direct access to good operators, right? Well, it's going to come from their peer network. At least what I've discovered talking to a lot of 2nd and 3rd generation wealthy families. It comes through their network. And this is a way to build their network if you don't have one already. When I first started, I didn't know any accredited investors. I didn't have a rich uncle. My parents never owned rental real estate. I had to kind of piece this all together myself. And when I realized there was a need for this product, people needed a community already built in of people that they could pay to get into, but they could have this community to, for doing this network, for deal flow, for, the people of like-minded, and also the same sort of caliber of people in terms of net worth and their trajectories. People ask me all the time, like, what keeps me motivated doing what I'm doing? Just keep doing podcasts, writing books. To me, I think the situation that kind of comes to mind, as sort of a success story is, it comes from when people start to implement this trifecta of strategies that we kind of educate people on, which is investing in alternative investments, tax strategies, and then also getting their family legacy together with whole life insurance, infinite banking strategies. Really, this trifecta of strategies really propels people to financial freedom a lot quicker. And it's a lot of these strategies, aren't really taught. I had to kind of piece together all these things for myself from sort of informal interviews from people I've met throughout my years. And like one example that comes to mind is, family, working hard, right? First generation, they've got a few $1 million net worth, or they're definitely on the trajectory to get there, but they are just saving their money, tight-fisted, very conscientious spenders and budgeters. But they've got kids and they're just kind of burning both ends of the candle. And we teach them something like real estate professional status. We connect them with the right CPA, and now one of the spouses doesn't have to work anymore, right? They actually net more money after taxes because one spouse doesn't work, and they can implement real estate professional status, and they pay a lot less in taxes, and they net more money at the end of the day, right? Beautiful situation, especially when now one of the spouses can spend their leisure time with the kids, right, as opposed to working 50-60 hours like a lot of you folks out there are doing these days. Now, one of you got to work, right, unfortunately, but I think there's usually a nice situation where, maybe the spouse that doesn't make as much or doesn't enjoy their job as much can, kind of take a break from it a bit, at least when these younger years, when the kids are younger, as mines are, right? I'm kind of living it myself too. And I would say, like, when people come into our mastermind, our community, I always, use the wealth elevator construct, right? We talk about all these floors and different strategies per the floor, different mindsets per the floor. But the idea too is like, once you get to the end, send the elevator back down for others, right? So we like to have this culture of, you come into the community, you learn it, you draw a lot of value from other people. And we have this kind of circuitous like culture where everybody's kind of helping out the new guy. And part of that is like when you've gotten yourself to a good place, you've gotten your own oxygen mask on. I mean, maybe that's when you're getting yourself to $4 or $5 million. That's when you kind of help out other people. And I think that's a pay it forward kind of mentality. And that's kind of what I'm here to try and facilitate and help people. Maybe I'm trying to model the way first with my podcasts. And even try to help out the little guys, right? The guys buying little rental properties. That was kind of where I started too, right? But at least, I look out there in the world, I'm like, well, I could go out there and build houses for humanity, but I'm horrible at construction, stuff like that, hands-on stuff. What is it that I'm uniquely put on this world to do? And I've been told, like, people like my zany analogies, and I tend to explain things for the average dude to kind of grasp on. And then also, like, what is the next step? What is the next step? Well, who do they need? What next, what do they need to get to their next part of the journey, right? I can usually kind of mind map that out for people. And so I guess that's maybe my role here, right? At least for the next 5 to 10 years, is to be the elevator doorman that presses the buttons for people and helps people go up and down. And that's I think that's kind of my role, or at least what I've kind of embodied in myself. Well, if you want to hear out more and figure out where you are in the wealth elevator floor map, check out my book, The Wealth Elevator, found on Amazon. And if you're a podcast listener, check out my podcast, The Wealth Elevator. If you're an accredited investor, reach out personally. I'd like to get on a Zoom call with you. You can reach out, lane@thewealthelevator.com.
21st Century Entrepreneurship with Martin Piskarik.
Imagine a space where triumphs, trials, and tales of entrepreneurship come alive. Welcome to the 21st Century Entrepreneurship Podcast, a gold awarded journey hosted by Martin Piskorik, connecting with listeners in 95 countries and ranking in the top 0.5% of all podcasts. Join our exclusive community, elevate your perspective, and embark on the path to success.